Assalamualaikum warahmatullahi wabarakatuh. The Honorable Coordinator Manajemen Study Program, Faculty of Economics, Dr. Suherman M.Si. Let me introduce myself. My name is Nilam Cahya, student of Management Study Program, Faculty of Economics, State University of Jakarta. Today, I will to present my thesis proposal. The title is The Effect of Good Corporate Governance, Firm Size, and Dividend Policy on Company Value. Study on 1,000 non-financial companies in Asia included in the world biggest public company for 2015 until 2020 period. This is the table of content of my thesis. First one is chapter 1, preliminary. This includes research background, research question, research purpose, and benefit of research. The second is chapter 2, literature review. This include is supporting theory, previous research, theoretical framework, and hypothesis development, research hypothesis, research, and research framework. The last one is chapter 3, research method. This include is unit of analysis, population and sample, data collection technique, variable operation, and analysis technique. The first one we discuss is chapter 1, preliminary. This is the first one that we discuss in this chapter, research background. The background that I want to use in this thesis is first is intense competition in the business and economic world requires companies to continue to innovate, develop, and earn as much profit as possible to support their company's operation. And second one is indicator that make investors invest their fund in a company. Stock price indicator are used to reflect the value of the company. The third is company value is considered very important because it can reflect the propriety of shareholder who have invested in the company. Fourth is to increase the value of the company. The work pattern of management is also one of the things that must be considered. Good management work pattern reflect as a good corporate governance. In order to attract investors to invest their funds in the company and provide satisfaction and value to shareholder, companies are required to have a good corporate growth. A large company size indicates that the company is experiencing good growth. The last one is the existence of good corporate governance and good company growth will make investors feel satisfied and confident to spend their funds to invest. In addition, the company's goal is to maximize profit and also maximize the wealth of the investor. This is reflected in how much shareholders receive their wealth through dividends. And dividend policy determines how much profit is received by the investor. The second is research question. The first one is, does good corporate governance have an influence on firm value? And second is, does firm size have an effect on firm value? The last one is, does dividend policy have an effect on firm value? This is the research purpose. The first one is, this study aims to determine whether there is an effect of good corporate governance on firm value. The second one is determine whether there is an effect of firm size on firm value. The last one is determine whether there is an effect of the firm policy on firm value. The last one we discuss in this chapter is benefit of research. There is two benefit. Yang first one is theoretical benefit. This includes scientific reference source for future research. The second is practitioner benefit. The first for the companies include information on company performance. The evaluation in the study can be used to improve company performance. Second is for investor, review the company's operation and financial condition. The next is we discuss about chapter 2, literature review. The first one is supporting theory. This supporting theory included agency theory, signal theory, good corporate governance, company size, dividend policy, and firm value. The first one we discussed is agency theory. This theory describes the relationship between the agent and the principal, where the managers as an agent must be able to run a company with the best decision to increase the wealth of the principal, namely shareholder. However, sometimes the shareholder cannot survive all decisions and activities carried by manager, so it will be a threat if what is done by the manager is not for the welfare of the shareholder, but for their own welfare. The second is signaling theory. Signaling theory is the shareholder perspective on the company's opportunities to increase the value of the company in the future, where the information is provided by the company's management to shareholder. The third is good corporate governance. Good governance is an important element for investment and financing through capital market, and is the key to promoting long-term economic growth. The fourth is firm size. Firm size or company size is one of the key in assessing economies of scale and market share. Strong market control tends to be a company high bargaining power in competition. The five is dividend policy. Dividends are very important for investor because dividend provides certainty of a good company's financial condition. The last is the value of the firm or firm value. Firm value is the price potential buyer are willing to pay if the firm is sold. The better the quality of the company's value, the more interested investor or shareholder will be cooperate or invest their capital. This is the second one we discussed in this chapter, previous research. The first one is from Deo Panggabean Prasetyono in 2017. Analysis of the influence of financial performance, corporate social responsibility, disclosure, and ownership, firm size, dividend policy, and preparation of the independent commissioner to company value. This is the title of the Panggabean Prasetyono thesis. This is my variable in this thesis: firm size, dividend policy, and good corporate governance. And the thesis of Deo Panggabean, the result is positive from size, effect to from value, and dividend policy. The result is positive, significant to firm value. And there is a lot of previous research that I searched from and is a research to my thesis. And this is the third of our discussion in this time. The third is theoretical framework and hypothesis development. The first one is the relationship of good corporate governance and firm value. Companies that implement good corporate governance will make investors feel protected from agency problem, so that they respond to the market positively and the value of the company will increase. The second one is the relationship between dividend policy and firm value. The company's decision to distribute dividends is a positive signal for investors. Investors will prefer to invest their funds in the company so that the value of the company increases as well as the stock price. The last one is the relationship between firm size and firm value. The greater the total asset, the greater the capital invested by the company. So it can be said that the size of the company is the size of amount of asset owned by a company. Investor will be more interested in investing or collaborating with the large company compared to small company. Okay, the fourth title that we discuss is research hypothesis. The first one, H1 atau H1 adalah is good corporate governance has a positive effect on firm value. H2 is different policy has a positive effect on firm value. H3 is firm size has a positive effect on firm value. This is the last one we discussed in this chapter, research framework. This is the framework of my research of my thesis. This is good corporate governance as X1, dividend policy as X2, firm size as X3, and firm value as Y. Okay, we next into chapter 3, research method. The first one is unit of analysis, population, and sample. Analysis of units in this thesis is good corporate governance, firm size, dividend policy, and firm value. The population is non-financial companies in Asia that are included in the 2020 version of Global 2000, the world's biggest public companies. The sample in this thesis is 1,000 non-financial companies that meet the predetermined criteria. The second we discuss is data collection technique. The data used in this research is secondary data. Of course, secondary data in this study were obtained to financial report and annual report through the official website of each company and the stock exchange of each country. This study took data for 6 years, namely the period 2015 to 2020. The third is variable operation. Variable operation this is two variable we discussed in this variable operation. The first one is dependent variable included from value. From value we use Tobinsky with the formula is market value of equity plus book value of debt divided by total asset, where Q are from value, market value of equity is year-end closing share price, and year-end number of shares outstanding. Book value of debt, corporate current liabilities minus current asset, and plus long-term liability. This is the second variable, independent variable. The first one is good corporate governance. We use 3 proxy in this variable. The first proxy is board of commissioners using formula the total of member of the board of commissioners. The second proxy is independent commissioner using formula independent commissioner defined by total commissioner, and the last one is audit commit using formula audit commit member in the company defined minimal audit commit member according to POJK. The second variable is firm size. Firm size using formula or proxy natural log of total asset or total asset. And the third variable is dividend policy using formula or proxy dividend payout ratio is dividend per share defined by earning per share. The last one is analysis technique. Analysis technique we using 4 technique. The first one is descriptive statistic. We collect data, process data, and analyze data and present it. And the second is panel data regression model analysis. Why I use this model? Because there is a combination of cross-section data and time series data where the same cross-section unit is measured different times. The third is panel data regression test. We use 3 techniques in this test. The first one is common effect model. The second one is fixed effect model. And the third is random effect model. And the last one is classic assumption test. Professor Tanley that the regression equation obtained has accuracy in estimation, is unbiased and consistent. Thank you very much for your attention, and this is the last of my presentation about my proposal thesis. Thank you very much. Wassalamualaikum warahmatullahi wabarakatuh.